Good morning, everyone, and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, December 7th. Michael Boutros here with you this morning. Good morning to you, D, as well. Iman, Mark, Peter, Pooja, Steve, Tom, great to see you guys all in the room. Finally, Michael with us. Welcome back. Yeah, thanks. Apologize about missing the webinar, guys. Some of you might know I have somewhat of a medical condition. It kind of takes me out every couple of days. Or when it does, it takes me out for a couple of days. So thank God I'm ready to go, pumping in all cylinders. And here we go. Into non-farm payrolls tomorrow. Dollar is making a break of some interesting resistance here, about 93.50. We talked about that. We're above it. The propensity for this thing to keep going from here is there. I'm not going to chase it per se, and I'll show you a couple of reasons why. You want to be a little hesitant about using this breakout level at 93.50 that we've been watching for the last 2 weeks, or last week, I should say. So we'll take a look at the DXY implications for the euro Kiwi from last night. We'll discuss pound dollar and pound Kiwi. Pound Kiwi and pound Oz actually played out pretty well. I got to add pound Aussie there as well. Kiwi yen, Aussie dollar, and dollar CAD. We'll obviously throw in their New Zealand dollar as well. Take a look and see what that's doing today. Any other pairs I didn't cover or questions that you may have? Thank you, man. I appreciate that. Feel free to throw them out at any time. Okay. Here's what we're doing. Here's what we're looking at heading into tomorrow's release. Non-farm payrolls are expected to print at 195. Recall that yesterday's ADP report was right on tap with what the market expectation was. So it sets the stage for a pretty durable non-farm payroll report. We're expecting 195,000. Caveats, you're going to be watching the unemployment rate and the labor force participation as always. Okay, if we see this contract, dismiss any decline that you see in unemployment. So if we saw this to go to 61 or 62.5%, for example, and you see unemployment downtick to 4%, that's not necessarily a good thing. It's more workers leaving the labor force. If that holds steady and you see a downtick, that's what you want to see as far as really pushing more emphasis on a stronger labor force recovery. That being said, remember, guys, the focus for the Fed right now, unfortunately, it's not really on the employment picture. It's on the inflationary picture, which continues to be the laggard. One thing we'll want to take a look at in tomorrow's release is average hourly earnings, which is a nice underlying measure of wage gains. So certainly, if we do see an uptick here, and we are expecting an uptick on both month-on-month and year-on-year average hourly earnings, so we'll look for strength there to suggest that we are seeing underlying inflation starting to really move into the wage section. Kiwi yen finally played out, short at 77.52, out most of it at 77, holding the last piece. Pooja, nice play. Yeah, Kiwi yen played well, right? So yen cross. So I'm always excited when I see those play out well. Aussie yen played out pretty well too. I kind of shoot myself in the foot. I got out a little too early, but it was the plan to play into support, and I even told you guys explicitly that I'm going to be holding just that range, and I'm playing inside that range. We've now since broken the downside, so the propensity again is a little bit lower there, but we will take a look at Aussie yen as well as Kiwi yen. I don't have it on the list here, but I'm going to add it. Gold did make a move here today as well, so we'll take a look at gold prices. And any other pairs you'd like to review, as always, feel free to throw them on the message board. Let's jump right in. Here's what the index looks like. Now, I'll bring your attention to Monday's or Sunday's open. Here was what we look like before we opened Sunday trade. And we had just rebounded off the 618 retracement. We did that rebound again on Friday. And heading into the open, we said, look, the propensity for the rebound here is there. 93.25 initial resistance. If we breach 93.50, would sort of validate a break of this descending channel formation, which shift the near-term focus back to the upside. So what happened? We came into 93.25, hesitated for a little bit, then we blasted through 93.50. So at this point, obviously, I'm not going to necessarily try to fight this dollar rally, but at the same time, I'm not too keen on getting really involved in it. Okay, so here's the daily chart as it stands right now. There was that confluence resistance zone. We made it back above the 100-day moving average, above the the 38.2 retracement. Bring this into a weekly chart to kind of keep gauge of where we are in the broader picture here. And DXY looks like this. Okay, so we're now testing, and this is the reason I don't want to get too excited about this about this dollar rally. And this is the benefit that we get by doing multi-time frame analysis, right? Longer term charts will sometimes highlight key regions that are invisible almost in the near term. And that low week reversal close at 93, 89, the low week reversal close from 2016, is still a pivot in price. You could see the break on the downside fueled some acceleration, was instant resistance, instant resistance. Again, the pop through saw acceleration to resistance there. And here we are again. While we're making it above this median line, we're still in that congestion region. So I can't get too excited here. And I don't really have a strong opinion on necessarily taking a position on the dollar index. But like I said, there's some hesitation there as you look at the euro, which we'll do in a moment. But keeping this in mind, 93.89 is that low week reversal close, okay, from 2016. So that's just ahead of this region here. Big region of resistance from near-term slopes, 618 retracement, and 1618 extension off the lows. That gives you 94.14, 94.23. Just ahead of that right now, there's that 93.80 level. So it is the 50% retracement of the near-term decline. It's the low week reversal close from last year, okay? And it's a little cause for concern here. I didn't have it here on the daily chart just because I didn't want to clutter it up, but there's the 50 right there. Almost exactly where we petered out, a little bit higher. So keep that in focus. Excuse me, keep that in focus here, looking at the dollar index. Another thing, I was looking at this chart earlier today, getting a little bit deeper on the 120. A pitchfork off the low seems to be in play. Too early to rely heavily on it. But if we tack that on, you could see multiple tags of resistance here. And again, further highlights near-term resistance right here. Low week reversal close, 50% retracement, median line resistance. This would suggest if this slope is in fact in play, which I'm inclined to work with it for now, it would suggest again that we would need to see a break below last Friday's swing high. That's at 93.25, and that's what would be sort of the breakdown zone to invalidate the near-term up bias that we've been working with since the start of the week. So let's see what happens into 93.80. Again, you know, personally, I'll be looking for possible near-term exhaustion here. One thing I don't like also is that, you know, objectively, if this is the weekly opening range, this break should have us calling for a late week high. So an extension higher today into tonight might be the play here for the dollar index. If we clear 93.80, there's free roam right into 94.15, 94.27. Former swing highs, again, 618 extension and a 618 retracement. That would take you up here. So the levels are clear. My favorite scenario, again, is to see some more push here higher into the U.S. trade session, look for some exhaustion. Momentum is already butting up against that 60 level on the 120 chart, so that looks pretty good. A near-term momentum trigger also looks good off of this low. I was looking at this earlier. So a breakdown below this, a break back below 93.50 puts us right back on course, in my opinion. Until that happens, guys, look for another push into the U.S. trade session into that 93.80 zone. Okay, so you know the dollar index, obviously, downside break of a descending channel, or upside break rather of a descending channel, puts us higher. The euro, okay, any questions on this DXY before I move off? And I want to show you why I'm a little bit more hesitant. So okay, so we broke through here. On the euro, it looks like this. And another one that we've been tracking for some time. Here's the euro look like last night on the update. If you recall back on the 5th, when we were just opening up the week, we talked about this near-term support on 118.46, but broader bullish inval. Okay, if this is just a correction off that, could take us as low as 17.88. So as we came into this thing last night, we rebounded right off that level. Take a basic slope resistance, a parallel off the lows, sees one touch, two touch. So I'm looking for support here. We did make a new low last night in trade, but we're still struggling to break below 1788. Look at this thing. And you're seeing some divergence start to take mount as well, right? Price action made a lower low here. The oscillator did not. Same thing with this next low. We'll see if we can't get some sort of reversal. But if we break below this, there's really nothing to keep this from 1700, guys. So it's make or break here today. Again, you know, the opening range hasn't been all that helpful. Sorry about that. The opening range hasn't been all that helpful in the near-term play, but not too keen on jumping on a short on the euro here or necessarily trying to chase the dollar higher. So we'll see if this pans out or not. There's plenty of opportunity elsewhere, so I don't necessarily think, guys, if you're not involved here, let's look to see a break above 118.05 would be sort of the initial thing that would put me on the constructive view. So if we move through this, look for a pullback to trade against this low to try to get back up near-term targets 1846, right back up into 1880. Former swing highs from back here in early October. Make or break. If it breaks the lows, sayonara. You know, I've been looking for a trigger on this, looking at the 30-minute this morning, trying to see some more divergence, and you are getting it with these two lows here. Get even closer on the 10-minute, and you're seeing, again, that momentum signature really start to tire out. Now on this thing, and this is what I was looking at earlier, on the 10-minute chart, this is like real near-term, guys. A trigger here, if I can get my tool out, is something that I'm looking at because support, resistance, resistance, the breakthrough, and here's the rebound in momentum right off that support slope. So at the end of the day, if we do make it through this high, look for that 18.05 break to really release the upside on this thing. Not bad. Couple of parallels there. Further highlighting, again, a breach through 1800 is really what we need, guys. All right. Any questions here on Euro? Nothing on the end. Could be a nice consolidation wedge pattern with a topside break. I don't know. All I do know is that I want to see basically price hold here as we get deeper into the U.S. trade session. Questions on euro dollar? Already took along. What is the deal? Stop, Mike, please. I initially set it to 117.70. So here's the thing, Amen. I do like it. I get a little concerned, okay, when you front run the turn. So, Iman, the only thing I would tell you is if you're trading like that, yeah, I mean, 70 to me seems like you're giving yourself just a little room beyond this low. That's fine. That's fine. That's how I would look to play it. But just be aware that when we're looking for stuff like this, we really want to see near-term pictures start to turn before we start to trade the turn. You could be marking divergence for another 3 days before it actually finally turns, right? So, I'm not going to say I don't like it. I do like it, Amen, because I want to see this hold. But for me to get conviction that that reversal is underway, I do need to see a break of 18.05. So initially at 1770 said I'd be okay with a trade like that. You're not risking that much. But just note that when you head into 118, look for something to happen. Okay, if it starts to hesitate there, I would start to shave a little bit off on that position. But if we breach, I do think you have a nice play. Such a scenario, by the way, if you do get that break, a nice retracement just off of last week's high on the near-term approach gives you 1839. The 50% comes in right at 1858. This would be the initial first topside targets on such a scenario. Okay, but this is your region. For you specifically, this is what you want to see break heading into U.S. trade. Make sense, man? She says, got you. All right. Okay. I want to see it higher. Let's see if we can hold here. Next up on tap, that's number 2, was Euro. Number 3, Euro Kiwi. Might as well just shift right into that as well. We covered that yesterday. This was one that actually played out a little better. So we didn't get the full extension. If you guys remember, the 100% was at 70, 75, and that's really the bullish invalidation level that we had cited. So we want to see an entry near that. As we were looking at this yesterday, basically looking for exhaustion low here. As we were heading into that region, we dipped one more time, but it did hold above, took out the median line, took out the high day close, okay? Or excuse me, that's the weekly open. I'm sorry, that's tagged wrong there, guys. But took out the weekly open, and this is the region of resistance that we're looking at, just around the 173 handle. Here's what Euro Kiwi looks like now. Okay, Euro Kiwi. So we're heading out. Well, we pulled back through below the I'm sorry, that is the high day close. It's not mislabeled. Yep, that's your high day reversal close right there. So we're testing the high day close for the year as resistance. 73 barrier is still the level I want to see crack, okay? If I snap my levels here so that the slope adjusts, that's the level that you'll see crack to the upside, give you a target of 74, and that's really the swing high that we need to clear to mark continuation. Remember, as it stands right now, guys, this still could be a topping process here. Not necessarily a big fan of trying to call that, but the play for me was to try to fight this turn down for a rebound higher. So if you're holding any long exposure, the high day close is a good level to take a little off. Stops at break even, a push higher, look for a move through 73 to really validate that last extension near 74.09. But as on whole, this has just made a weekly opening range. Straight down shot, nice reversal. We'd need to see that range clear to get the validation for the medium-term bias. Looking at it on the daily chart, you can also see that that longer-term formation that we've been holding in all year long, the 50 line, perfect support. Okay, so break below 74 really puts this thing on a track into 69.50. Long way down. As it stands right now, seeing if we can't get that last push higher towards the 50 line. Questions on Euro Key. So Kiwi dollar is probing right back into key resistance, or key support rather, excuse me. So if that breaks, throw fuel on this Euro Kiwi. I think you get a much bigger move higher. If Kiwi holds, and again, we've been testing this support region for weeks, it could limit the top side here. So curbing my expectations, but certainly still looking for a little bit more of a concerted move higher. Questions on Euro Key. All right, so those are the two Euro crosses I've been following. Here's what the British pound looks like today. This will be number 1, 2, 3, 4 on this session. Sterling last night looked like this. Okay. We were trading into the lower parallel of this near-term formation, as we had noted. You kind of couldn't put too much emphasis on this formation because we haven't seen any pivots. Some pivots, but not too convincing off the median line. So long story short, we want to stay constructive above 333 was our bearish and bullish invalidation level. We dipped just below that and ripped higher. Now, the dip actually found support, a little sneaky retracement there I didn't note last night, but right at the 38.2 retracement. This is the advance from the most recent ascent off that August low. Okay, so that 38.2 caught the highs here, caught the highs here, and here we are, perfect touch of the lows. So what do you do in a trade like this? Well, I'm still inclined to look higher. I'm still inclined to look higher. 33.38 was our bullish invalidation level. It got as low as 33.20, so beat us by 18 pips. But look at the strong mean reversion trade right back higher. Okay, that's something you want to pay attention to. Dig down into a 120-minute chart. You can see again the magnitude of that bounce. Here's the 60, right? Pretty immediate, putting us right back into that formation. So again, the immediate focus for me is on this break here with the topside break favored. Okay, so it's 34.17 to 33.20. Look for a break, upside favor, targeting the high day close again in 135.43. Also, if you take a look at this, just more objectively, let's say we just ditch this slope, right? Basic trend line off the lows, even using that stretch low we made last week, which I'm not really a big fan of using them. Again, highlights exactly where we bottomed. So I'm inclined to look higher in this. I'm still inclined to look higher. Yeah, you got nothing as far as the upside here. One touch, two touch, three touch, acceleration, kind of messy on the way down. But long story short, again, it's all the same trade. The euro dollar is sitting at support. I want to see that hold. Sterling dollar testing support today. I want to see that hold. And if it does, it really gives us a little bit more conviction that that dollar index breakout may not be legit. If it is, and dollar index travels higher above the 93.50 level with a close today, I think we got to change our opinion on what's going on with the greenback. Remember, seasonals aren't all that strong. But, you know, you have the Fed on tap next week. They're expected to hike interest rates by 25%. That's baked. The emphasis is really going to be on those quarterly projections. So questions on pound, tentatively looking higher above 33.20. Near-term resistance 34.17. Again, crack higher. Look for the high day close. That takes you to 34.95. Questions on pound? Okay, moving right along. Pound Aussie. This one actually panned out pretty well. So here's Pound Oz. And where we stand now. If you guys recall, again, early in the week here, we looked at Pound Aussie. On the 4th. Here's what we look like. And the basic emphasis of the trade here, and we talked about this, was the fact that we had made 7 consecutive weeks of advances, okay? That's not including this week. That's at the start of this week. And, you know, we looked at this on Tuesday, the last couple of times that you saw 7-day rally or 7-week rallies per se, you saw a couple of turns. This was an 8-week rally that caught this turn. There was another one that caught the high earlier in the year. So it suggests that, okay, you may want to be a little bit more cautious on the upside. We still love the upside of the trade. Again, 3-point touch trigger break that we made here a few weeks back keeps us constructive, basically well above the yearly open at 117, 119. Larger view, right? Looking at this from 1,000 feet up at the weekly charts. Daily charts look like this. And on this stretch and reversal, you had an outside candle reversal, outside day reversal, you know, last week. And that shifted the focus lower. It gave us a little bit more of a risk for a move lower. The high day close, the previous high day close came in at 75.61. The 100% extension of the near-term decline gave us 175.38. We probed just lower and we whiplashed higher. So we looked at this in the webinar on Tuesday and we said, you know what? We want to look higher against that. You know, it did stab lower. Again, a sneaky trend line here just off the wicks. Literally almost caught that exactly before rebounding higher. So the focus was for a move higher last night. Here's what we look like. Initial target was 79.93. Then you look for the median line, that 50 line that's been basically catching this slope a little bit higher. And that's basically what we're trying to test here right now. So first target's out, second target's out. Next upside major level is going to be the 80 handle. Swing back here is just going to find some former swing highs in price, or former swing lows rather in price. And then obviously you have the 50% retracement from the highs that we made in 2016, and that takes you to 181.60. Okay. First things first, guys. This needs to break the highs. Okay. Again, here's what the daily chart looks like. Just give you some picture. A nice break of resistance, test of support. You'd look for that extension higher, 81.59, 81.42. Big region of resistance based on slope, longer term. 1618 extension from the decline, or from the ascent, excuse me, off that low last year. And again, that 50 off of last year's high. All converge right here. Broader bullish invalidation level. Remember last week when we were trading back into this high, the broader bullish invalidation was up here at 71.19. I still think on a weekly scale it's pretty clean. Near term, if this thing were to break back below the November open, the weekly open. Oh, that's the... That would change things. That would change things. So bring up your near-term bullish in about 73.46. If it breaks back below that, forget the long side of the trade. Likely see a bigger correction. You know what? That was labeled right. This is the... It was the November open. I'm sorry. I don't know why I'm doubting myself here. Okay. So that is the November open. Obviously, it's last month, but you're still looking here for support just based on slope. And there it is here on the intraday chart. That's what would put me bearish. So we'll see if we can squeeze out a little bit more juice here on pound Aussie. Now, Aussie dollar obviously has been helping assist on this move. And we'll look at that in a moment. But any questions here on pound Aussie before I move off? Okay. Pound Kiwi was another pound cross that we've been tracking. Here's what this looks like. Again, overshot our support by a little bit, but the reversal looks pretty good. Pound key is right here. Okay. It was too clean. And I get concerned. I always tell you that guy was too clean, too picture perfect. It literally came into the 100% extension and rebounded right off that. I noted in the report a couple days ago, this is the focus range. If we break above 95.73, all right, cool, let's take it back to the upside. A break back below this region, you know, you kind of get concerned for a run all the way back on support, all the way down to 91.67. So you probed lower and you tested this slope support, and then you reversed higher, a little bit surpassing our levels. And there's what it looks like now. Overshot it. You saw that slope hold again. Once you made it back through, top side of the range is given out. You're getting some kickback here, but I do want to see follow through 95.60 here into the U.S. Open. It's your weekly open. It was exact resistance, and this is why even you know, when we brought this up, what was concerning, and I kind of noted that, is that price reversed precisely off the weekly open. When you see stuff like that, it typically means you have another downside slope to play, or you have another downside target, a new low to make for the week. Aurelian says, no rush, I will listen to the replay on possible CAD trigger on this retracement from Friday. For dollar CAD? Yeah, we got it. I have it on list. We'll go over that next if you're looking for a trigger there, Aurelian. No problem. Dollar CAD. And also, I saw your question here, Iman, on dollar Swiss. I don't haven't been following it, but we'll definitely take a look. So real quick, pound Kiwi. Any questions on this? I want to see a conviction break above this near-term slope. Again, the high day close, which is also, the monthly close and the high close for the year. Okay, so it's not the high day close. The high day close is actually down here, and we're kind of straddling it. Interestingly enough, the high day close comes right at the former highs that we made right here before we broke. So an interesting pivot in price I'm still watching, but the high close comes in at 97.95, and that's also exactly where we open the month. So the emphasis is really on that break to give you continuation for 1995. Or excuse me, 199.95. All right, nice hold here in momentum right at 40. Still looks pretty constructive. That's pound Kiwi and pound Aussie, 5 and 6. Let me segue right here to dollar CAD for Aurelian. Here's what dollar CAD looks like. Dude, I don't know with this thing. It's quite the mean reversion. Again, you know, a lot of people start to look for this double top formation, one high, second high. You know, if we had a firm break below 26.63, it really would have opened up things. Now, we had key support just a little bit lower, so even if it would have dropped it here, I probably wouldn't have started to chase the downside. But here's the reversal. I don't really want to stress this slope anymore, Aurelian, just because, I mean, you saw some hesitation at the 50 line, but it soared through the median line. The lower 50 didn't really catch resistance, so I'm not stressing this formation per se. As it stands, I'm treating this like a range. Aurelian, so you're talking about a short trigger on this retracement to Friday. So let's do this. Well, let me show you one thing real quick. The weekly chart for dollar CAD is very convincing in that it tells us what the larger picture is doing in the key regions of support and resistance that we need to look for. Keep in mind, this is the range that we're talking about literally for nearly 5 weeks here. Okay, it's 29.27 on the upside is resistance to 50% retracement of the yearly range. And then you have slope support. And this slope has been pretty pivotal. Okay. Sorry, from 2012, right? So there's the pivot support, there's the break, we talked about that, it highlighted support here. resistance where we found highs earlier last month. That retracement, that's backed closely by the 52-week moving average. So despite all the hoopla and all the volatility that we've seen, near term, the focus is still on this range. So Aurelian, if you do break 29.27 to the upside, you have the 52-week moving average just a little bit higher at 130, but that to me would suggest a larger play to the upsides at hand. Not my favorite scenario. I actually do want to see this hold. But before we start, jumping into the position, I need to see a little bit more conviction near-term price on a turn. So keep this region, keep this picture, guys, this weekly chart. Again, anyone new to the room, there's a camera button at the top of your GoToWebinar screen if you want to take a picture at any time of any of the charts that we're presenting for later in the day, or if we need to refer back to it. Please feel free to do so. But until this breaks, the medium-term outlook really is a range right here for dollar CAD Aurelian. Now, taking it into the deeper daily chart, what really focuses is that we never broke the November opening range. Here's a November open. We set a high, we set a low, we tested the high late in the month, and we closed right at the opening range lows for the month. And while we did slip below it, look to the left, couldn't make a close below those lows at 26.60 and change. So you gotta wait for a break of this range. You gotta wait for a break of this range. Near-term immediate resistance, I'd be looking at 28.86 into 29.27. That zone is exactly what caught the highs last October. It's exactly what caught the highs for November, and it's exactly resistance here on a whole host of things on this advance. So first short, just keep that in mind. He says, understood. Right on, Aurelian. I like your thought process here, but for me, we just want to see a little bit more conviction on the reversal. Here is the intraday chart, right? Momentum, still got a little room before you get into 70. Nothing screaming exhaustion just yet. That being said, I'm still looking for it, okay? Here's the 120, starting to get into overbought condition. So again, remember, while we're up here, Aurelian, the momentum, the propensity for the market to keep going is there. Here's the last time that we broke an overbought condition on the 120-minute chart was last week, and you saw that once we broke into overbought, while we didn't make any new highs, right, divergence, this thing continued to march higher. So as long as something is in overbought condition, that's not when you want to fight it, right? It's the break below 70, that's the trigger, okay, that we're seeing a shift in the momentum profile. So this concerns me about trying to short this just yet. Get into the even deeper time frames. Here's 30. You're right back into overbought again. Here's your 10, showing a little bit of a divergence signal. So wait for those longer term, the 30-minute, to start to move back into from overbought condition. On such a move, we break back below 128.21. Cool. At that point, maybe I'd start and be looking for the pullback Aurelian. But as it stands right now, just keep your eyes on those sort of factors that we've been looking at. Make sense? Hey, you're more than welcome, sir. I appreciate that. All right, so that is dollar CAD, number 7. Remember, guys, it's NFPs next tomorrow. So all the dollar crosses that we've talked about so far, expect volatility. Okay. All right, I want to jump back to the Kiwi crosses, and then I'll jump into the Aussie and the Aussie crosses as well. So first off is, let me do, we did Kiwi dollar, and dollar CAD was number 8. Let's do Kiwi yen, number 9. Here's Kiwi yen. This one worked out really well. Who was talking about this earlier? Pooja, right? There you are. Finally played out, yeah. So Kiwi yen did, it was very clean. It was very clean. And it's a yen cross, so whenever I see cleanly price action in a yen cross, I always get super excited. Kyle Johnson here saying, Kiwi yen, please. Coming right up, sir. It's right here. The focus of this trade, as we opened up the week, we talked about this resistance barrier at 77.68 into 77.77. Kiwi yen, where was that guy? It was earlier in the week. Here we go. Kiwi yen. So beautiful picture from the daily chart, beautiful picture from the 240-minute chart, and it looked pretty darn good. So you had a lot stacked up here. You know, from the daily standpoint, it was a 786 retracement for the advance, or the retracement rather of the entire yearly range. So the 2017 retracement puts a 786 right there. It was the exact low that you made back in October before you closed it out. And a decent pivot in price, right? Once you saw the break below that last month, it plummeted right into support. There's a rally. So we were looking for exhaustion ahead of 77.66. The intraday charts showed a little bit more of a range. The November open came in at 77.77. That's kind of where we marked our bearish invalidation level. So this thing came right up into that region, held perfectly. Momentum was building divergence all throughout this week. So you can see that ever since last week's high, all these highs that we made never resulted in a higher high in momentum. So you were looking for exhaustion, looking for the pullback. Again, the weekly open was 77.39. Once we broke back below that, that was another attempt to get back in short, guys, when it tried to break through the weekly open again and failed. And there's the move. Didn't quite make it into 76.91. So if you had your limit there, you know, you might be a little frustrated now because it kind of popped a little bit higher. It's only 20 pips or so, but keep that in mind, guys. Leave yourself a little bit of a cushion. So I always say I like to put my limits on the inside and my stops on the outside. Meaning, if I'm looking to play within the confines of this ascending channel, I'll put my limit just ahead of channel support. If I'm looking to trade against channel resistance, you want to leave your stop on the outside of resistance or support, just to give yourself a little bit more of a cushion on both ends. So that being said, basic channel support, you saw a perfect touch and rebound there last night. The emphasis is on this. I still think you could get another push higher back into the slope, but the emphasis has to be on an objective break below 76.91. It's the 50% of the advance. Also keep in mind now, it's the objective weekly opening range lows, right? 77. So objectively, a 76.91 break would shift the near-term focus to the downside. In such a scenario, I would be looking for a stretch into 76. I do want to bring up just real quick the 618 retracement because it comes in at an interesting level right here where you've seen some pivot in price. That's 76.72. But the targets are really tight. Obviously, this is a pretty tight range. Once we get this breakdown here, you know, I'll be looking to play the larger extension down to 76. All right, so some clear price action here. Just note that you are, Kyle and Pooja, you are opening the market for U.S. trade right above the weekly opening range lows, right above support. So I love the fact that, Pooja, that you've taken out 3/4 of the trade, you're still holding on to a little piece. That's awesome. Or she says most of the trade. That's awesome. That's exactly how I would have it. Limit at, excuse me, your stop at break even or better at this point. A break below 76.91, honestly, whatever you have left, I would kind of just watch it. I wouldn't necessarily put a limit on it. Well, I'd leave a limit on 76, but I'd want to see because that might be the onset of a larger decline. You know, one thing you want to do when you're looking at price approaching these resistance targets is look how we've seen price react on these advances. And you'll see very similar price action. Push, push, you start to get some momentum divergence, little spike higher above the median line, collapse. Same thing here, push, push, one last push, you're still getting divergence and momentum, collapse. Push, 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 again, divergence and momentum. Might be a nice downside shot if this breaks. Remember, Kiwi dollar is trading at a critical support barrier. Okay, here's the Kiwi dollar chart. Guys, did we cover Kiwi already? Or did I count wrong? Here's the Kiwi significance of that level. We've been talking about 68.28 forever, literally for 3 months now. Okay, the September decline or the October decline stopped right there, and we opened it up. We said, you know what? This is the monthly opening range for November now. So as long as we stay above 68.30, the risk is for a rebound. But boy, do we want to see this break. This confused the hell out of me last month, right? We dribbled below. Objectively, a break of this range should have you looking for a, you know, a big drop. That's the monthly, the yearly opening range lows, the 2016 open, big region, right? Market had something else in mind. Broke back to the upside, and you see this consolidation range now making lower highs and higher lows. So look for a break of this consolidation. As I said, guys, the favored break, in my humble opinion, is to the downside on this. But you know, until we make it through those lows, caution. Caution. Iman says, thanks for it. Short at 77.73 since Tuesday under your amazing strategy and closed it yesterday at 77.23. Satisfied with my profit. Nice, Iman, nice. On a trade like that, but here's what I want to tell you. So you made over 50 pips on a move like that. Awesome. That's well above the quarterly ATR, so you're ahead of the game. But when you see that price is reacting, Iman, when you see that it's giving us what we're looking for, I would have played it like Pooja did, right? Take a little off the table, lighten your leverage on it, and see if you can't get the bigger play. You're always, when you're trading in the direction of the trend, I'm a big advocate of holding on to a little bit. Obviously, no one's going to argue with me this isn't a downtrend, right? I think we're all on the same page there. So when you're at downtrend resistance, those are trades where when you get the first initial target, I'm always going to take off half, 3/4 of trade, leave a little on. Things that are encouraging for the Kiwi yen pullback. Momentum signature trigger here, resistance, resistance, nice hold. Again, the behavior towards that resistance line that we've been talking about, further validation. What would validate, in my mind, the reversal would be a break below the monthly open. Okay, it's 76.89. So if we break the monthly open to the downside, in my mind, that would validate this reversal play off resistance. You'd be looking again for that drop into 76. Subsequent targets on the downside, 75.62. That's actually the swing low for the year. But yeah, Kiwi yen looking interesting here. Maybe a little bit of a bounce into the U.S. Open. Emphasis on a break of 76.91 near term. One of the better plays this week. One of the better plays this week. I'm glad a couple of you guys caught that. Kyle was asking about Kiwi yen as well. Kyle, does that answer your questions? If you have anything on this, let me know. But that's what Kiwi looks like. Pooja says limit at 76.30, stop at 77.25. What do you have at 76.30 there, or 70? Pooja, you looking for these swing lows here? Sure. And an 88.6 retracement. All right. Pooja, my girl, she's got it right on. So the 88.6 is a sneaky little retracement. Not a lot of people look at, guys. The square root of 786. It's just another derivation of the fib ratio. But it tends to be some really nice levels. And especially, I don't know if I've told you this before, especially on commodity crosses. I don't know why. I couldn't tell you why, but CAD crosses, Aussie crosses, Kiwi crosses, a lot of times that 88.6 just comes out of nowhere and offers some nice levels. So glad you caught that. Objectively, it is also some swing lows here from earlier last month. So yeah, nice inside target. Nice inside target. And 76 obviously is the big player, right? Pooja, that's still the level you got to beat to validate a much larger drop. And remember, objectively, the yearly opening range lows here. Kyle says, perfect. Thanks, Mike. Hey, cheers, Kyle. Pooja says, and the swing low. Yep, got you on that. It's Kiwi and yen, not to mention, right? So the reason I also like that is because if you look at what we're looking at on the swing side of trades, Jamie's highlighting some Kiwi short positioning here. And dollar yen short. So that's yen strength and Kiwi weakness. Hey, the combination of that should offer a real nice play here. So I like it. I like it. Let's see. Maybe another bounce here, like I said, into the open of the week, into the open of the U.S. trades, guys. But as long as we hold below the weekly open, 76.39, still like a move lower. Look for a break below 76.91 to get this thing going. Who would have thought we'd have all this time talking about Kiwi yen, right? Jeez. End of year trades always get exciting. Let's move on to Aussie yen, another yen cross that played superb. I mean, this one, again, I was telling you, I'm kicking myself. I got out way too early on this. 85.12, so there's another 30 pips to the downside here that we're moving. That was the December open, and there was also some slope there. So if we look at Aussie pound or Aussie yen, excuse me, from earlier in the week. Here's what Aussie yen looked like on the update from the from the 5th. Okay, coming into a nice resistance level. That resistance level was defined on the daily charts here by the 38.2, retracement of the decline from the yearly high. You had the 200-day moving average there in green, right there as well. And you look for a resistance bounce to the downside. It's an 86.15 level. The broader trend is still lower. Bearish invalidation was 86.93. Didn't want to see that, but if we had broken, that was the risk. And really, the break below December opened at 85.12. That's what I wanted to see to validate a break back into the lows here. So you can see that on the pullback. Again, I got out at 85.12, but on the pullback, look where this thing rebounded perfectly off the lower parallel. Then it held right at that median line. Okay, this median line you see here in red is just a parallel of the same slope. Boom, boom, boom. This is the high that we made back in July, on 26th. Right, that same slope, median line here offered some support, perfect support, perfect resistance. And it converged on that 85.12 level. And that's why, for me, that was it. I just wanted to get out as soon as I saw that. Now, objectively, what is supporting further move lower here is that objectively, here's your weekly open. You make a low, you make a high. That's your weekly opening range. Once you broke this low, it was, acceleration to the downside. So that objectively keeps us bearish below, the opening range lows for the week, which is what I noted. Yesterday. And if we do see this downside break, there's really nothing. You might want to look at the swing low for the year, the swing low from last month. But really, it's 84.25 into 84.12, huge region. You have so much lined up there, guys. The yearly open, objectively. So, it's funny because we're heading into the end of December trade right now, and if this thing ducks down a little bit lower, you're literally going to have a yearly doji here on Aussie yen, which is very, very interesting. But that being said, that's the emphasis level to break. So for those of you holding short exposure, if you held on past 85.12, I give you props on that. I'd have my stops at 85.12 or just above at this point. If we break back above this region at this point, I want to kind of duck out of this trade. So that breaks you basically into like 85.20. That would sort of change things for me. But as it stands right now, look at price action. And even, look at near-term price action, guys. Here's the 120. Here's the 60. Support, support. Once we broke that parallel, you saw a little bit of acceleration on the upside. Resistance there again before slamming lower. Now, what I do want to note is that the momentum signature here is looking a bit tired. Okay, this is all divergence all along the lows. Lower low, lower low, lower low, higher low, higher low. So yeah, the momentum signature, it's not screaming exhaustion, but it's not necessarily giving you that much conviction. The only thing I do like is that on every upside of slope, every upside approach here in momentum, it's failing ahead of, ahead of 50, ahead of 60 is what we want to see, but ahead of 50 is even stronger of a bearish position. So overall, the momentum profile does still remain pretty bearish. It's just that the downside bearish signal, or the strength, the magnitude of that signal is softening. Okay, so important things to take note of here. That said, I like it lower below 85.20. Bear with me one sec. I just want to see what this looks like. All right. Well, downside break of a descending slope. Obviously, we didn't have a lot of play here, the 50 line off or anything. It's not bad. You can see on the stretch higher here, we failed at the 50 line. On the rebound, we failed again near the 50 line. So if this pitch is in play, again, this is real near-term stuff, guys. The break of a descending channel formation, you would expect to see further acceleration to the downside. So if the U.S. Market opens, this thing breaks below 30 and it clears the lows from last night, which we already did, I would expect to see some further downside pressure here in Aussie yen. Questions on Aussie yen? Who knew coming into the week Aussie yen and Kiwi yen was going to be our favorite setups, right? That's funny. All right, so let's segue back to Aussie dollar. That'll be number 11 on the session, heading into the close of the week, heading into non-farm payrolls. Here's what Aussie dollar looks like. Let me zoom out and let me take you back to the daily charts. Actually, on this one, I want to take you to the weekly charts. On Aussie yen, the basic play or Aussie dollar, the basic play, and you guys know and have been talking about the same setup for over a month now. It's kind of been a little tedious here ever since breaking below 76.26. Ever since that break, remember, we wanted to turn bullish here. This was former slope support. There's another upside slope there. There's a 38.2 retracement of the barter ascent from last year, 618 of the ascent just from this year's July low or April low. They had a lot lined up there. Once it broke, we said, look, for this broader uptrend to remain intact, it's either two things. It's either we break back above 76.30, we look for the pullback, we get long, or we get that final dip into 75, 74, 72, and look for entries there. This is the broader bullish invalidation. If we break below this level, you know, objectively, I don't care what anyone else says, it's just what the price action is saying. A basic slope support and a 50% retrace of a 2-year range would put us broadly bearish. Also, if price were to break below here, I'm looking to see if momentum actually does dip and close below 40 on a weekly close basis. If it does, again, the risk really is for a material complete breakdown in Aussie. I don't think that'll happen. I'm looking for support heading into 75. So keeping this in mind, the weekly close is absolutely paramount here. All of this wick action that you see, if you bring this into a close basis on just a line chart, you could see ever since that break back in what is that, October, it's all about this region. So we need a weekly close above 76.30 or a weekly close below 74.70 to validate a direction. Till that happens, I'm still looking to buy dips above 74.73. So with that picture in mind on the broader weekly chart, right, here's what it looks like on the intraday. Here's your daily chart. Here's the new monthly opening range open. There was the breach, or there was the check of the median line as resistance, and there's that 76.30 level. Again, ever since we broke back below that, we've been looking for this drop into 75. Looks like we might get it here today. 74.99 is a 786 retracement of just the near-term advance. Again, longer-term slope off of last year's low. Big, big region. Ideally, if we dip into here, you see momentum divergence on a daily basis. That's beautiful. Hopefully you get a hold near that region and a stretch higher. If it just collapses, if tomorrow's NFP is kind of a big upset, all of a sudden dollar rips, even if it does do that, look for support at the lower parallel and look for the session to close the week back above that 75 level to get the conviction. But broadly, we're fishing for a low here. Am I going to put a trade behind it? Absolutely not. It's just not there yet. The justification for trying to fight it is not there yet. But just know, heading into 75, specifically 74.70 on that weekly chart, that key 20 pip region for me is make or break for Aussie dollar. Questions on where we stand with the Aussie? Here's the intraday chart. So this retracement is using this low. Obviously, we've made a new low, so I'm just going to delete this for now. Okay, but the levels are still pretty clear. There's a level to beat as resistance. Here's where we're looking for support. All right. Questions, comments, concerns on Aussie? Okay. Dollar Swiss. This question was for Iman. Dollar Swiss. Here's what Swissy looks like on whole. Haven't looked at this yet, so give me a second. So remember, the measured double bottom move is still here at 101.07. Nice defense at 50 in the momentum signature. Look, it's still, near term, it's still constructive. The broader picture is still bearish, But as you know, me and Jamie both looked at the same thing on this for a little bit more of a conviction push. Um, but you can't really get excited until you break this trend line. So I don't know if there's necessarily a near-term setup. Iman, remind me, are you holding something on this, or are you looking for new opportunities? Because I don't have anything new as far as a fresh entry I would necessarily be comfortable with. Um, obviously basic trendline resistance off the highs here does look like it's coming into play. This massive, dump did break the median line, the lower parallel for this formation that we've been following all year long. But look at the recovery. It was really quick. So do you just dismiss that as a false break, breaking the highs from last week, shifts the focus higher? You're at resistance. You're looking for new opportunities, huh? Yeah, I just don't have it here, Eman. I mean, I would tell you if I liked it, but if you put a gun to my head right now and say, Boutros, tell me what you're going to do or I'm going to shoot you, I would say, hey, look for resistance, maybe a correctionary pullback here. You want to stay constructive above 98, but ultimately you need to see that break to target that 99.91 level. So maybe a play where exhaustion, pullback, find support, former opening range highs, then rip back up into 99.91. The problem is if you try to take a long here, where is your stop? Nowhere responsible. At the same time, you don't really have the turn and momentum signature that's there just yet to trigger a short. Although I might be lying, there's a trigger right there that actually looks pretty good. It's only a 2-point touch. That'd probably be a little bit more accurate. And in such a scenario, obviously your stop's going to be right against the highs, right? So make sure that you're maintaining a proper risk reward on that. All right. Sorry I don't have a little bit stronger of an opinion for you on this, E-Man, but near term, that's what I'd be looking at. Let me know if you have any other questions on that. Here's a nice little channel formation, actually, that I've been following it all week long. Real tight. So again, gives you emphasis on a break below this region to get you bearish. As far as the upside is concerned, you're basically, we maxed out where we hit that today. Make sense? Got you. Patience is the game for now. Better for me. Cheers, man. All right. Pooja wants to take a look at CAD yen, please. Anything on the short side there? Let's take a look. I have not looked at CAD yen. So that was number 12 for Iman with Swissy. I do want to jump into gold real quick, but let me take a look at CAD yen here for Pooja. CAD yen. Do I not have a chart on CAD yen? All right, so obviously I haven't looked at this trade in quite some time. Bear with me one moment. I'm less and less inclined to work with this slope. Okay. All right, let me just clean this up a little bit. I'm going to dump this for now. Take a basic trend line. Yeah, the basic trend line support off last year's low converging right on the 200-day moving average. So that's right here. It's your key support.
This key resistance.
This was a sweet spot, Puja. This was a really good, again, you had the 100-day moving average converging right on former swing highs, um, which is very interesting. This is actually the 618 extension from the advance off last year's low. And that turn certainly was pretty strong off that region. Let's see what the near-term picture looks like. Okay, I'll keep that 38.2 as a light target just because you've seen some pivot action right there. Support, breaks saw resistance, resistance, breaks saw acceleration. So watch 87.43 as an immediate pull here, but no, trying to get in on this on the short side, I think at this point is a little risky here, Puja. I would say the problem to me is this actually already looks like it could be a five-wave motive to the downside. Impulse 1, 2, 3, 4, 5. So you look for one last low before some sort of near-term recovery. The range is big here, which is what's a little concerning. So I'd be looking to fade strength below 88.90 still. That'd still be a level I'd be looking at. But immediately from here, maybe get a drawdown here, bounce off 84, look to sell that rally. But I don't have any fresh entries on the short side I'd feel comfortable playing even from here. I mean, on a real short-term basis, I guess, Puja, if you're really trying to scalp it, if you get a rebound near here and it fails ahead of the Asia high, or the European high, excuse me, it might be worth it taking a shot, but actually your European high is still way up here. It's nothing. You're going to be chasing this on the short side from here. I wouldn't go there. Stop against 88.90 is where I'd feel comfortable. We're way too far off that at this point. Pooja, does that make sense? Ooh, I'm way over on time. Okay, real quick, gold. I just want to show you that gold is, look, it broke at 1263. The larger, longer-term bullish invalidation level, which we cited in our quarterly forecast and something we've been talking about for a while, is still 1240 and 1246, this region here. So I am expecting a drop into 1246 as it stands right now. It's a 618 extension. Also long-term parallel converge right there. 1240, the weekly charts are kind of really the tell here, okay? 1240, 1246, here's what we're looking at, okay? The 52-week moving average, the 200-week long-term moving average, a little bit lower than that. The 50% retracement of this year's entire range from last year's advance, from the advance off last year's low, excuse me, and then even near term, it's a 618 extension from the decline, so it gives you a nice little cushion region there. That's big. That's going to be a big break if it does breaks up 1240. But on this immediate push, I do think you have lower to go here in gold. So just watch that as we head into the U.S. trade session. Also note that we never cleared the November opening range. Here's your November open. You set a low. We were already at support, this key support level at 1263. You bounced higher, failed to push through the opening range for the month. Here's the pullback. Last month's objective opening range finally broke to the downside. So I would, a gun to my head, I would expect to see a little bit more of a drift lower near that 1246 pattern there in gold. All right. Okay, I'll be on the lookout for a three-way advance on the next low. That's exactly how I would play it on that CAD yen because it has a little bit of a clear wave structure to the downcline. If you see a three-wave advance, especially if it gets up to that near-term resistance we were talking about, Pooja, that's the conviction on that one. Yeah. She says, thanks, you're more than welcome. All right, guys, that concludes this week's webinar. So I want to wish you all best of luck heading to tomorrow's release. Remember, we're expecting a print of 195 on NFPs. So keep your eyes on the caveats, average hourly earnings, and those under or labor force participation numbers are going to be critical when we're trying to gauge where the Fed is going to be looking at tomorrow. So keep an eye on that. That being said, I will see you all on the free session on Daily FX on Monday, and then right back here on SB Tuesday, Wednesday, and Thursday. Best of luck trading, guys. Have a great weekend, and I'll see you tomorrow. Cheers. Or I'll see you next week, rather. Cheers.